Imagine a market where glittering skyscrapers meet shrinking demographics and bustling hotel lobbies sit side by side with underused office towers. That's the paradox of Japan's real estate landscape today, ripe with opportunity, yet riddled with challenges. Into this complex picture steps Mitsubishi UFJ Financial Group, MUFG, Japan's largest bank, with a bold new move. A 100 billion yen, $680 million real estate fund. This isn't just another investment vehicle, it's a strategic bet on the country's evolving property market, targeting offices, residential complexes, and hotels at a time when the sector is being reshaped by remote work, tourism rebounds, and long-term population decline. But will this fund unlock hidden value, or is it sailing into troubled waters? What is the MUFG Real Estate Fund? Announced in September 2025, MUFG's new fund is one of the largest property-focused investment initiatives in Japan this decade. It will focus on underperforming or undervalued assets in key cities like Tokyo, Osaka, and Nagoya. Invest across office buildings, residential complexes, and hospitality properties. Be managed by MUFG's asset management arm, which aims to double its real estate portfolio by 2030. This marks MUFG's second-largest real estate fund to date, signaling the bank's confidence in real estate as a growth driver even in a challenging macroeconomic climate. Why launch a fund now? The timing is fascinating. Several key dynamics make Japan's property sector both risky and attractive. Office market flux, remote and hybrid work have reduced demand for traditional office spaces. Yet, prime office towers in Tokyo still enjoy high occupancy, creating a flight-to-quality trend. MUFG sees opportunities in upgrading or repositioning older buildings. Residential stability. Despite Japan's shrinking population, rental demand in urban centers remains strong. Young professionals and smaller households fuel consistent apartment demand in Tokyo and Osaka. Hospitality revival. Tourism is roaring back post-pandemic, with Japan surpassing 30 million international visitors in 2024. Hotels, resorts, and short-stay accommodations are once again lucrative investment targets. Capital market conditions. Japan maintains some of the lowest interest rates in the world, making property financing attractive. Global investors are eyeing Japan as a safe haven market, with its political stability and strong rule of law. The fund's strategy in detail. MUFG is targeting undervalued, underperforming, or transitional assets, properties that are not currently realizing their full income potential. This might include older office buildings in need of renovations or repositioning into mixed-use spaces. Hotels in secondary markets that could benefit from improved branding or modernization. Residential complexes catering to growing demand for affordable, high-quality rentals in urban cores. By acquiring such assets and applying capital improvements, MUFG aims to generate outsized returns while supporting Japan's broader urban transformation. Implications for Japan's real estate market. The launch of this fund sends strong signals. Renewed institutional confidence. When the country's largest bank doubles down on property, it reassures smaller investors and foreign partners about the market's resilience. Urban repositioning. Expect more emphasis on adaptive reuse, turning outdated offices into apartments, co-working hubs, or hotels. Global capital attraction. International investors may co-invest with MUFG, amplifying Japan's role as a key global real estate hub. Opportunities and risks. Opportunities. Tourism. Boom. With Japan targeting 60 million annual visitors by 2030, hotels could deliver substantial returns. Sustainability and ESG. MUFG can leverage ESG-driven upgrades, energy-efficient retrofits, and green certifications to enhance property values. Demographic shifts. Aging populations create demand for senior living facilities and medical-adjacent housing, another niche MUFG could tap. Risks. Population decline. Japan's shrinking and aging population could undermine long-term housing demand outside major cities. Economic uncertainty. While Japan enjoys stability, global slowdowns or currency volatility could dampen returns. Office oversupply. If hybrid work persists, repositioning older office buildings may prove harder than expected. Comparisons to global trends. MUFG's move mirrors global shifts, where big banks and funds are targeting value-add strategies. In the US, firms are snapping up struggling office towers to convert into apartments. In Europe, ESG retrofits dominate institutional investment plans. In Canada and Australia, residential rental funds are growing as affordability pressures mount. Japan is now joining this trend with its own flavor, anchored by tourism, urban resilience, and extremely low interest rates. What this means for investors. For investors, both domestic and international, MUFG's fund provides a chance to co-invest with one of the world's largest banks. Exposure to diversified assets, office, residential, hospitality, rather than just one sector. Potential stability in a volatile global market, since Japanese property is often seen as defensive. At the same time, investors must weigh the demographic headwinds and structural shifts in work and housing. Japan's real estate outlook. Looking ahead to 2030, MUFG's bold target of doubling its real estate assets underscores growing conviction that property will remain a pillar of wealth creation and economic stability in Japan. We may see more adaptive reuse of buildings, stronger integration of technology, smart buildings, AI-driven property management, greater participation of foreign capital through partnerships with Japanese funds. If successful, MUFG's $680 million initiative could serve as a model for other banks across Asia seeking to balance risk and opportunity in turbulent real estate markets. Conclusion. MUFG's new $680 million real estate fund is more than just another investment. It's a bet on the resilience of Japan's cities, the rebound of tourism, and the adaptability of real estate in a changing world. But here's the big question for you. Do you think MUFG is making a smart long-term play, or is this fund too risky given Japan's shrinking population and uncertain office market? Drop your thoughts in the comments, because whether you're an investor, a homeowner, or just someone fascinated by global property trends, this move could reshape how we all think about the future of real estate.